We're going to continue on with Garvin's construction for 2012. We just computed all the computations we need to do the journal entries, and then we're going to hustle on through, and we're going to try to do the financial statements also. All right, so what do we need? First of all, we need to recognize that we have some costs that we're going to recognize in the current year. And again, we're going to assume those were all paid in cash. So our construction progress was $6,000, and we're going to assume those were all paid in cash. If you look at the additional information, we had $5,000 we billed on the contract. And again, that's a debit to accounts receivable and a credit to billings on contract. And the customer actually paid us $4,800 on this contract. So we're going to debit cash and credit accounts receivable for $4,800. Now, and the last entry then is what I would call the money journal entry. And what do we need out of here? Well, the revenue to recognize in the current year. Remember, we're going to focus on two numbers here, the revenue to recognize in the current year and the gross profit. The plug is going to be to the cost of construction account, which is kind of like our cost of goods sold. So we compute the revenue, we compute the profit, and plug back the cost of goods sold. So our revenues in the current year were $5,450. The profit we're going to recognize, or the construction, where we're calling it construction in progress, $825. And so then our cost of construction, which is our plug number, is $6,275. And if you think about this construction in progress account, well, let's think about this. Let's put these to the T accounts and see how it goes. So let's close that, and let's look at the T accounts then for this. So our first journal entry, our construction in progress, we put another $6,000 in this account. But then we had an $825 adjustment to this account. Okay? So the $625, the $625 plus the $6,000 minus the $825 gives us a balance of $5,800 in the construction in progress account. Okay. I'm also going to put an amount in here for my billings on contract because I've now billed another $5,000. And so my total at the end of 2012 should be $5,450. Now I can take this data then and put it into my financial statements. I'm going to do this pretty quickly. So if you want to check some of my numbers, that would be great. Remember, the revenues were $5,450. We computed the cost of construction. This was our plug number, which was $6,275. And so our gross profit on this long-term contract now is $825. If you went ahead and did the T accounts for cash, well, don't do the T accounts for cash. Let's go ahead and plug back to it using the statement of cash flows. If I did the T accounts for accounts receivable, though, I would find that it was $250. I calculated just on a couple slides back that my construction in progress account had $5,800 in there, and that my billings on contract, which is the contra account, which is $5,450. Okay. I know in my common stock account that doesn't change. It's $1,500. I now have a negative retained earnings. So we went from a positive $125, we subtract out the negative $825 in net income, and we get a negative $700 in retained earnings. And that's indicative, and that's clear here, remember when we computed how much loss we had in the current year or through the contract, it was that negative 700. And you can see now that retained earnings is that running total that picks that up, especially since we started at 0. So if we calculate the total equity, then we should have a total equity of $800 at the end of 2012. And we know that's going to be 800 then too, right? So let's look at our statement of cash flows. Our net income was 825. Our change in accounts receivable, it went up again, so that's a negative 200. Our construction in progress went up from 5,800 and to 625. So it went up a negative 5,175. Okay, and our billings on contract account went up by 5,000. So that's a positive 5,000. So if we add all those up, it should come up with a negative, let me compute, a negative $1,200. If my beginning cash was $1,400, my ending cash, I need to take that little bracket off there. My ending cash then is going to be $200. So if I put 200 in there and then add all that up, that does equal the $800. So everything balances and I'm happy. So now we are done with 2012. We're going to do one more video. We're going to do 2013 in one video, the computations, the journal entries, and all the financial statements.